How's it going, everyone? So today I want to talk about something that I think some of you might be thinking. And the question is it too late to get started investing in real estate? Now, today is February 21st, 2021, right? So if you haven't been reading the news, then you wouldn't know. But if you have been, then you have been seeing that real estate prices have had phenomenal appreciation rates over the last really 10 years, if you will. And so the question is, are we at a peak? And when or if or should I begin to invest in real estate given the prices? And I get this question a lot from clients. And let me just take a step back. In 2016, when I was really ramping up one of my companies, which was to help investors buy turnkey rentals across the nation, back then I had to sell this idea of buying rentals and why it made sense from a cash flow and total return standpoint, as well as a way to diversify your portfolio away from stocks and other volatile markets. And back then I was telling people that we're really in the middle of a huge wave that's going to be one of the most attractive assets for some time. And back then my argument was based around supply and demand. We have a substantial shortage of supply and it's only going to get worse. And at that time, I anticipated the interest rates not going up that much, resulting in very affordable properties for people who wanted to buy rentals. And so over time, I was pushing the idea and the concept. And when people began to realize that, hey, wait a minute, this rental real estate thing is a real investment that provides cash flow. It provides a way to long-term wealth. And I get the benefit of leverage on fixed debt. It's a no-brainer. And so now there's a plethora of investors out there, to a point where if you meet any turnkey provider, they'll tell you they can't keep the supply on the shelves. As soon as they get it on the shelf, it sells. In fact, our portfolio, we're doing 8 to 10 deals per month. And we often sell most of the deals before we even finish rehabs. So the question is, okay, well, with all this demand, with the short supply, with the constant increases in prices, should I wait? Or should I invest? And here's what I'll tell you. I don't foresee the supply issue being fixed for some time. Developers are still underdeveloping what they need to develop. The Biden administration has already made it known that they're going to be talking about and focusing on affordable housing and probably giving people tax credits to purchase homes, which is going to put more demand on that asset, right? So supply has more problems coming. There is roughly 2.5 million foreclosures in process, but it's pretty obvious that the Biden administration's going to keep kicking that can down the road. So who knows when that supply is even going to come to fruition? And by the way, it's probably not going to be the best type of product anyways, right? What you're looking for is a solid C+, B+ class of product in a stable market, diverse economies that does cash flow and provides you a consistent path to wealth. And so to answer the question, I would say there's always a deal somewhere. Now, back in 2016, your cash on cash return, again, which is just one component of the overall real estate equation, and I'll include a video above here. If you want to understand how total return is calculated, check that video out. But cash on cash returns back in 2016, I could invest my money and make 16 to 20% return on my money. Well, today that has substantially come down due to all the demand in the market. We're seeing, cash on cash returns today of 6 to 8% in good deals. You're lucky to get 10% cash on cash return. Now, keep in mind, with a 8 to 10% cash on cash return, plus let's just say 3 to 4% appreciation, plus the fact that your tenant is paying down your mortgage, and if you have tax benefits, you could realize a 20 to 25% return annually on your real estate product. So even at a 6 to 8% return, it's still an attractive investment. And, you should always be invested in a variety of asset classes. I always push the idea of private money lending for passive income. I push the idea of stocks. I think it's a great investment to have long term. And I push the idea of real estate. I think you need to have a portfolio of all those three. And so, long story short, I don't think you should wait for real estate prices to correct because, frankly, I still don't see any indications that it's going to correct. The one thing that we should be looking out for is the affordability index. Where are we relative to 2008, to 2000 during the crashes? Well, if you look at the affordability index, we still have some room to go on prices. In fact, we probably have another 10 to 20% appreciation on asset values before affordability even becomes an issue. And here's the thing. When you look at the broader economy, there's people are talking about inflation. In fact, I talked about it months ago. Due to all the stimulus, I was worried about inflation. In fact, my good friend Michael Zuber and I interviewed Stephen Roach from Yale University, chief economist at Morgan Stanley for 30 years. This guy's no joke, right? He was talking about the crash of the dollar. And so I was beginning to hedge my portfolio with gold. And I later realized through a phenomenal investor, Kathy Woods, and she nailed it on the head, there's a lot of deflationary things happening in the economy. And so the Fed's not going to be increasing rates for some time until they can consistently hit that inflation target of 2 to 3%. And so when you think about that, prices will go up. And I think due to the supply and demand issue. And I think the Fed's going to consistently keep rates low for at least 2 to 3 years. And so that's going to continue to give people the option to pick up cheap debt. That's going to drive more demand towards housing. You're going to see the tax credit come out from Biden coming up here. And I think people are still jumping on the train, understanding that real estate rentals are a cash flowing, solid investment. And so I don't think you're going to see price decreases in most markets. Of course, there's always going to be markets that do collapse. Dayton, Ohio, for example, with a collapsing economy, or San Francisco or New York. Certain markets will collapse. That's just the nature of the beast. But the majority of markets, again, stable economies, diverse economies, not sexy markets, just stable, boring markets. Pick up properties there if you're cash flowing 6 to 10% cash on cash ROI. And I think you'll do just fine over the long term. So I wouldn't wait. I think it's not too late to get in. It is a long-term journey, and get in. Don't wait for the crash, because I don't think it's going to happen. I've been saying this for some time, as has my good friend Michael Zuber. We were one of the only people on the market telling people it's not going to crash, while every other pundit out there, guru, if you will, was putting on clickbait telling us it was going to crash. Where are we today? It hasn't crashed, and it's not going to crash. At least not for some time. And so I wouldn't wait. I would find, again, good deals at cash flow, and, make sure that your tenants are happy, take care of the property. And over the long term, you will gain wealth like many real estate investors do. So that is my take. Get in, pick the right deals. Doesn't have to be home runs. It can be a single or a double, and wait for the long term. And I think you'll do just fine. Thanks.